What's up everyone, this is Crypto Harvest back at it again with another portfolio recap video. If you're new here, I'm on my path to early retirement and I'm a CPA. Please check out week one's video as that sort of encompasses exactly what I'm doing to generate these insane yields. I will go into detail, but not as much as I did in week one, so please check out that video, give it a like, share it to your friends. Anyways, each week I post a quick portfolio update on my stocks and crypto and how I'm staking passive income using options and DeFi. My channel is really a lifelong journey of mine to financial freedom, and in this week I've got something different. Typically I sell a lot of like commodities on gold, on silver, on oil, for example. But this week I'm starting to build a short thesis on Circle, which is the company behind USDC, which is a stablecoin. So I'll go into detail and explain why in a few minutes as to why I'm shorting Circle, but we'll jump into that in a bit. Moving on, first I want to speak about my stock and options. So this week I earned around $1,000 in stocks, or in options rather, and this is a bit inflated. My normal ROI is around 20%, so if you see 60%, again, this is inflated. A lot of factors happened today. First off, some of my options that I trade 45 days out expired, worthless, so I gained a lot of options premium in that way. But also my crypto yield is pretty high this period too, just because of all the volatility in crypto with Trump signing the Genius Bill Act, which we will also cover later on my short thesis on Circle. But Trump signing that act, getting it approved through the Senate, through the House, really ramped up the crypto volatility. And when I'm yield farming, I love volatility. I make a lot of money off it. So that's why you see our ROI this week at 65%. You definitely won't see this every week. If I hit 65% ROI, then you'll see my portfolio hit the millions in a few years, right? So it's not possible, it's not feasible. But at 20%, it's okay. I see people do it. I'm doing it for a few years now at 20% and I'm making profit. So don't be alarmed with this insane ROI and be like, this guy is full of it. I'm not. This is just a very good week and a few things fell into the right places. But yeah, okay, so let me see here. So the strangle, I'll go into my gains specifically on Questrade, which is the platform I use, and selling options. So as you can see here, all of these are green. There is one for Ethereum that is in the red, but that has a caveat to it because I'm actually selling a covered call here. So overall, I made money. My cost basis was $17. So really, it's 17 minus the 22.5. So 500 times 2, 1K. I made like over $1,000 on this Ethereum call option itself. So nothing to really be too nervous about. Everything else was green. We're happy. We move on with our day. Okay, so now getting back to the real gist of the video is the short thesis on Circle. So this is getting interesting. Let's dive into it. All right, so talking about Circle, the company behind USDC, as you can tell from my name, Crypto Harvest, this is literally what I focus on, blending crypto and stock strategies into one portfolio. This trade was right in my wheelhouse. Now let's to fully do a deep dive, I won't go too much into detail, but I'll cover some key reasons as to why I'm shorting this. I won't go into super detail because I know a lot of you aren't very into all the math and stuff like that. You just want to know what to do and how to make money. But I do think it's valuable to give a few comments as to why I think Circle will go down in price. As of right now, the first thing I want to bring up is regulatory overhang. So what we saw here is the Genius Act passed. I think it was sometime this week. Passed the Senate at like a 68-30 vote count. This allows basically stablecoins to be considered a security and have to follow certain federal oversight. This people think is good for Circle. I'll loop back to it. I think it's terrible for Circle. But first, let's go through the House process. I think the House has actually signed off on it, and Trump will sign off on the bill very soon. I believe that's what happened today, just a few hours ago. This is the reason why I think it's an issue. If enacted, right, if signed off by Trump, we're looking at U.S. banks like J.P. Morgan, Wells Fargo, etc., that could directly issue stablecoins, posing a major competition threat to Circle, right? If other people can do what Circle does, then that gives Circle basically no competitive advantage anymore. So that's one basis. The second point that I want to make is that they have a declining market share. So I've been dealing in the crypto space for quite a while now. There's a few main stablecoins, right? You have USDC. You have USDC. Sorry, I keep spelling it wrong. You have USDT and you have like DAI or whatever, right? There's a few other ones, right? But these are the big three. Tether, which is USDT, is majority, right? You have like, I think they own like over 50% plus. I have to look it up actually, but I believe it's over 50% plus of the stablecoin market. USDC sitting at like 60 billion now at maybe like 20% of the market. So they're actually declining in market share compared to before. And once you incorporate the regulatory like banks that add in their own stablecoin, I don't know if you've heard, but PayPal have their own stablecoin now, their market share is just gonna fall. So again, they make their money primarily off interest. Therefore, it's a solid bet that it won't go up too high. And this brings me actually into my third point, is their extreme valuation. So Circle stock is priced right now at a trailing PE or a current PE ratio of 2,400 to like 2,600. So that's why I saw recently. It fluctuates, but it's around there. So this is like crazy. And not only that, their forward PE, which is like their future forecasted PE, is like 170 to like 190 right now. This is well above their fintech peers. Even like Coinbase, which has a way better revenue stream where they can make money off deposits, off transfers and stuff like that. Whereas Circle can only make money off interest from people putting their money in their stablecoin. They are operating at a much lower valuation than Circle, like 20 to 50 times range, not in the 200s, 2000s rather. That is pretty insane. Also, the last thing I want to cover is the lockup period. So Circle IPO'd back a few months ago, and they have roughly a 180-day lockup period after IPO, which expires in late November. So the issue is, once everything is locked up, historically, you see insiders sell post-lockup period. This makes sense, right? They've locked in, I think Circle was trading at $30 back in the day, like just a month ago. And now they unlocked, once it gets unlocked in November, in late November, if the stock is currently like $250, right? They're gonna sell this out, and it's gonna tank the stock price. Facebook saw like a 50% drop, right, when they did it back in the day. But yeah, so the conclusion is there's a large insider share dump that could cause significant downward pressure. And it really is the reason why I'm shorting Circle. Not the token itself. USDC is fully backed and it's a stable coin. But I sold some naked calls on the stock when it was trading around $200. So as you can see, I traded the calls earlier this week at around $200. The beauty of selling calls is that, or selling options, is that you can pick and choose exactly how you want it to play out based off your thesis. My thesis is that it won't really go above 300 again. So in the short term, for a week, I set my strike price at like 250. And it was at levels I wouldn't mind shorting from. That's the key to this strategy, right? I only sell calls at levels where I'm comfortable shorting if it does get assigned. So if, let's say, Circle goes up to 300, then I'm shorting at 250. I'll be down like $5,000, but my expectation is that, hey, in the next like year, this shit's gonna go down to like 100. So therefore, even though it's trading high, eventually it'll go down. And in the meantime, I got to lock in my premium and also gain a higher strike price than the current price of 200 when I sold my call at that time, was trading at. Okay. So again, to summarize, if Circle drops or stays flat, great, I keep the premium. If it runs past my strike, I'm also fine. I short it at a price that I was happy with, and from there I can roll it into like a cover put strategy and keep trading going. Now, this is a more advanced strategy. If you want videos like that, let's get this video to 100 likes. I'll make a dedicated video walking through how I sell naked calls and how I manage the risk, and when I use this in my portfolio. I know it's unlikely to happen to get 100 likes, but hey, I'm telling you that for the content, it's so worth it. I remember just like sharing this video with your friends and your family could get it to 100 likes pretty easily. It take a few buttons, but it can change your life, trust me. But a warning, this strategy isn't for beginners. For example, if Circle were to spike to like $400, you're on the hook for some serious exposure. That's fine for me because I have the buying power and the risk tolerance, but for like someone just getting into it, always know your limits. Okay, so that's all for USDC and Circle. Again, if this video gets 100 likes, then I will make a video about my trading strategy for selling naked options. There we go. Okay, 100 likes. I'll make a video about selling naked options. All right. We can move on to crypto and DeFi yield. So it was another solid week for crypto. Let me just go through my portfolio here. Everything went up crazy. Our DBank is now at $42,000. Our HBAR is now at 27,000, Solana 1.5k, Akash at 6,700. So we've seen some significant spikes, mainly rallied by Trump signing the Genius Bill. But again, I harvested in yield over here quite a bit, and I can show it to you guys as well. But on DBank, I've had around $500 in yield, HBAR around $267, Solana and Akash just 5 and 10 and 13, so not much there, but the total yield is quite significant. Again, it's the same strategy as week one. I'm not chasing crazy APYs. I rather earn like a solid 25%, sometimes 100% on something sustainable, which sounds crazy to say, but this is crypto, so anything is possible. Then gamble on some shitcoin with like 2000 APR on something that might just vanish tomorrow, right? So overall, this is my summary, and these are the gains I've made. I made 65% this week on annualized ROI. So that's it for week 2. Another week of steady progress, options income, crypto yield, and the beginning of a new short thesis on Circle. Remember, I'm not here to chase moonshots. I'm just staking consistent passive income week by week. If you're on a similar path, trying to build wealth through smart cash flow strategies, subscribe and follow along. And again, if this video gets 100 likes, I'll make a full breakdown on how I sell naked options and manage the risk. Next week, I'll share why Oscar Health is back on my watch list, and why crypto farms and which crypto farms I'm rotating into for Q3. That's it for this week. Keep staking that yield, and as always, crypto harvest, peace out.